Hello and welcome to another edition of 115 Capital's Chalk Talk. I have here with me my coalition partner, Praveen. Hey, Praveen.
Hey, Arvind, how are you doing today?
Good.
So, Arvind, which company are we going to be talking about today?
So we are going to be talking about Crowdstrike. So let me give you some background on the company. Now, Crowdstrike is a cybersecurity technology company that provides endpoint security, threat intelligence, and cyber attack response services. Now, this company has been involved in investigations of several high-profile cyber attacks, including the 2014 Sony Pictures hack, the 2015, the 2016 cyber attacks on the Democratic National Committee, and the 2016 email leak involving the DNC. Now, Crowdstrike works with a number of governments that have certified their Falcon platform and provides global customers with the best security platform to stop breaches. So, Praveen, let's talk about the industry strengths.
Sure. The global cost of cybercrime is expected to double by 2028. In 2024 alone, AI and machine learning are set to play a more critical role in cybersecurity. Also, the expansion of remote work necessitates a heightened focus on cybersecurity, particularly in securing remote access to work environments. Phishing attacks have been growing. They have long been a persistent threat in the cybersecurity world, and they continue to evolve in sophistication and effectiveness. Zero trust security, as it is called, operates on the principle of never trust, always verify. Unlike traditional security models that focus on securing the perimeter, zero trust assumes that the threat can exist both outside and inside of the network. So, Arvind, let's talk a little bit about Crowdstrike's high-level analysis on the stock.
Sure. So the share price of this company has surged by over 200% since January of last year. Now, Crowdstrike stock price has been in a remarkable rally as investors circle back to the AI, artificial intelligence, and cybersecurity companies. Now, Crowdstrike is one of the biggest software as a service companies in the world with a market cap of over $68 billion. Now, the company's annual recurring revenue, ARR, crossed $3 billion in the last quarter. So, Praveen, let's talk about the factors.
Yeah, the first one, we'll combine two ratios in the first factor, price to sales ratio and price to earnings ratio. A key concern among investors is that the company is priced for perfection, right? Or it is overpriced. With a market cap of $68 billion and estimated fiscal year 24 revenue of around $3 billion, it means that it has a price to sales ratio of 22.3, which is a huge premium. In comparison, if you look at Microsoft, the biggest SaaS company in the world, has a price to sales ratio of 10. Its net income is also expected to be about $717 million, meaning that its price to earnings ratio is estimated to be 94, which is again quite huge. Microsoft, for example, and other SaaS companies like Salesforce have a price to earnings ratio of less than 40 in comparison. This is a sign that Crowdstrike is overvalued and priced for perfection. So let's talk about the next factor.
Okay, so the next one we're going to be talking about is the RSI, the Relative Strength Index. Now, the share price of Crowdstrike has remained above the 50-day and 100-day moving average. Now, the RSI, which gauges recent price actions, strength in a stock, currently stands at 79. Now, this firmly suggests that Crowdstrike is overbought, especially in the short term. Therefore, both traders and investors might be best suited to await stock pullback and price stabilization in the short term.
Great. So let's talk about price projection.
That's the most important thing for us, right? So being overvalued is not entirely a bad thing, right? People who overlooked other overvalued companies like Nvidia, Tesla, and Shopify have lost a huge opportunity as their stock surged. Now, in Crowdstrike's case, the company needs to justify this valuation by having strong revenue and profitability growth. Now, how can Crowdstrike achieve this? Now, it can achieve this because of the rising demand for cybersecurity solutions internationally. Most analysts expect that companies will boost their cybersecurity investments in the coming years to avoid liability. Now, the most important thing, what do we expect the price to be? Well, 3 years from now, we expect the price to be double what it is right now, which is around $580. So what do you say, Praveen?
It's definitely a buy given the price projection, but it's a cautious buy. Investors should wait for the right opportunity to put money, and then it's a long-term buy.
You got it. I agree with you on that. So there you have it, folks. Until next time. Thank you.